Welcome to DebtCircle Key Roundup. I'm Vijendra, and we've got a packed show covering India's rapidly evolving debt and financial markets.
And I'm Leela. From the explosive growth of GIFT City to municipal bonds gaining traction across Indian cities, plus major corporate fundraising and bond market volatility, there's a lot shaping investor sentiment right now.
Absolutely, Leela. Let's begin with GIFT City, which now hosts over 1,150 entities, including 37 banking units, with banking assets exceeding 110 billion US dollars, making it a key driver of India's global financial integration.
And that scale is transforming India's financial landscape. The city's regulatory agility and global standards are attracting fintech, insurance, fund management, aircraft leasing, ship leasing, and global capability centers, all aligned with the Viksit Bharat 2047 vision, focused on infrastructure, talent attraction, and ease of doing business.
Meanwhile, Indian cities are preparing to issue municipal bonds totaling nearly rupees 4,000 crores this fiscal year, fueled by regulatory encouragement and rising investor appetite for urban infrastructure financing, with Maharashtra leading through at least 7 planned issuances worth over rupees 3,300 crores.
That's a major transition in India's financing model. Greater transparency, regulatory oversight, and government incentives are boosting confidence in municipal finances, and the market expects 7 to 10 new issuers this year, although Greater Mumbai itself still hasn't entered the municipal bond market.
Now turning to the broader bond market, the Reserve Bank of India transferred a surplus of rupees 2.87 trillion to the government, below market expectations, creating concerns around fiscal slippage. The benchmark 6.48% 2035 bond yield closed at 7.0917%.
And that lower surplus has intensified worries around the fiscal deficit, with forecasts moving toward 4.7% and in some estimates even 5% of GDP, compared to last year's 4.4% and the government's target of 4.3%. At the same time, overnight index swap rates eased as traders adjusted expectations around future RBI policy moves.
Oil prices are also influencing sentiment. Indian government bonds are expected to gain as Brent crude slips below $100 per barrel amid optimism around US, Iran peace talks and negotiations to reopen the Strait of Hormuz, a route responsible for roughly one-fifth of global oil shipments.
Exactly, Vijendra. Lower crude prices reduce inflation pressure for India and could delay the expected rate hike cycle. Even so, Standard Chartered still expects the Reserve Bank of India to begin raising rates from June 5th, with 225 basis point hikes anticipated in June and August.
On the corporate bond front, Bajaj Housing Finance plans to raise up to rupees 2,000 crores through a 5-year bond issue, starting with a base issue of rupees 500 crores and a greenshoe option of rupees 1,500 crores.
And the AAA rating from CRISIL should attract strong investor demand, especially as appetite for high-quality corporate debt remains elevated. The coupon will be determined through investor bids on May 26th, reflecting current market conditions and demand dynamics.
Another major issuance comes from NHPC, which plans to raise rupees 20 billion through separately transferable redeemable principal part bonds with maturities ranging from 6 to 15 years, backed by AAA ratings from CARE and India Ratings.
That state-backed strength makes NHPC particularly attractive for conservative investors seeking stable long-duration investments. The company also includes a greenshoe option worth rupees 15 billion, allowing additional fundraising if subscription demand remains strong.
Indian Railway Finance Corporation is also making headlines after raising $1.1 billion through a yen-denominated loan as part of a larger $2 billion external commercial borrowing program for fiscal year 2020.
But the timing is tricky. Rising Japanese interest rates and a stronger yen are increasing currency risk and hedging costs for IRFC. Even with healthy asset quality, management now faces margin pressure while trying to diversify into metro rail and logistics financing.
Another big trend emerging is sustainability-linked financing in commercial real estate. REITs like Mindspace Business Parks and Brookfield India Real Estate Trust are increasingly tying funding to ESG targets as banks tighten traditional lending.
That strategy is helping maintain investor confidence and control borrowing costs despite elevated rates. However, stricter ESG regulations, retrofitting costs for older properties, and growing disclosure requirements could squeeze margins and accelerate consolidation across the sector.
Let's also talk about corporate fundraising activity. Vindhya Telelinks approved raising up to rupees 200 crores through non-convertible debentures, while expanding optical fiber cable capacity and proceeding with its merger with Birla Cable effective April 1, 2026.
At the same time, Anupam Rasayan plans to acquire up to 74.20% of Bliss GVS Pharma and raised rupees 160 crores through secured non-convertible debentures, while Sikal Logistics secured a rupees 115 crore credit facility from Axis Bank to refinance debt and strengthen liquidity.
In healthcare, Narayana Hrudayalaya recommended a final dividend of rupees 4.50 per share and announced plans to raise rupees 1,500 crores through debt issuance to fund future growth initiatives.
Precision Wires India also strengthened its balance sheet with working capital facilities totaling rupees 540 crores, while Vikran Engineering declared an 18% dividend and increased its borrowing limit to rupees 1,500 crores, alongside plans to raise rupees 400 crores through debt securities.
Meanwhile, wealth management firm 361 Global Asset Management received SEBI's no objection letter to begin international wealth and fund management operations from Gift City, leveraging tax exemptions and India's rapidly expanding wealth ecosystem.
And in real estate finance, Peninsula Land received an IVR BBB- stable rating for a rupees 278.9 crore rental discounting loan, while Kotak Mahindra Prime plans to raise up to rupees 7 billion through highly rated bonds offering a fixed coupon of 8.28%.
So whether it's Gift City emerging as a global financial hub, municipal bonds reshaping infrastructure financing, or companies aggressively tapping debt markets for growth capital, India's financial system is evolving at remarkable speed.
Absolutely. Investors now face a market balancing opportunity with volatility. From oil prices and fiscal deficit concerns to ESG financing, global borrowing risks, and rising corporate bond issuances, staying informed will be more important than ever.
And that wraps up today's edition of the DebtCircle podcast. Thanks for joining us on May 25th, 2026.
We'll be back soon with more updates from India's debt, credit, and fixed income markets. Until then, stay informed and stay invested.